Trading Market Technicals morning call video for Thursday, September the 5th. Green across the board. Good econ data yesterday morning fueled a little bit of some risk on appetite. Dow Jones up 96, Nasdaq up 36, S&P up 13, and the Russell up 9. We gapped up pretty hard into the at the opening at 9:30, and then ran up a little bit more. Right around 11:30, 12 o'clock. We kind of flatlined the rest of the day. Again, this is on low volume because we do have a lot of people now just starting to get back into the markets. Next week's we're gonna have a full week, first full week in the last couple of weeks, and I do suspect volatility to continue and markets really start picking up as far as volume is concerned. Now today we have a ADP report, which is the job numbers. It's a quite volatile number, so the numbers could go either way, and it's usually a hint on what is to come for the non-farm payroll numbers that come out tomorrow. Now tomorrow is really the big one, and now we're going to really see, and usually this will kind of set the trend for the month, and we'll take it one step at a time. But tomorrow is going to be really the big number, and I do think that volatility, either way, whether it be to the upside and or to the downside, will start picking up after tomorrow is over, and that's what I'm really looking for, keeping my palate really dry, especially on when you have a big gap up and or a big gap down, especially when you're day trading, you're coming in flat. If you're not coming in long or short that direction where it gaps, pretty much the day is pretty much wasted unless you can find some good volatility trades to be had. But nonetheless, we did gap up yesterday. We had a good strong numbers. I'm really waiting to see what happens for tomorrow, and then really readjust my plan for the month of September. Now, we are getting into seasonal weakness, and remember I mentioned that the next 3 weeks usually marks the weakest 3 weeks of our seasonal weakness from now till somewhere in October, middle of October, and then it starts to subside a little bit more, and you see more buyers step in. Now, does that mean that yesterday we had a big move up, that seasonal weakness is over? No, of course not. It's only one day. One day doesn't make a trend. But it's nice to see some buyers step into the market, even though it is low volume and we're just coming back off a holiday weekend. Now, yesterday I also put out a long video about we covered the forex markets, we covered gold, of course, and equities and oil. So I wanted you to, if you missed that, go back and take a look at it. There's a good chock full of information on forex and why I think that the forex markets are probably going to start hinting more volatility, which will give us a hint that we're going to have a lot more volatility in equities. All right, so I just want to show you a couple of things. I'm not going to get into it too much because the indicators really hasn't changed much. We are now still in neutral territory here from negative 30 right till about positive 30 or 40. When we start reaching 50, 60, 70, we start getting a little bit overboard. But again, we could still move much higher from here. Here's the bullish percent SPX. We're still in the downtrend, and a big downtrend. And this, as I said, when we did touch this, we just started rolling back over again. So this went on a sell signal August 12th and continues to be on a sell signal here. So nothing really much to say. We are a little bit oversold in the RSI, but again, guys, we're still on a sell signal. So this here, to me, to really validate a big move up higher, we have to take out some key pivotal resistance areas, which we did fill the gap on a lot of the sectors that we follow, which I'll show you in the chart segment. But again, to me, one day doesn't really make a trend. And if I see further weakness coming into today or tomorrow, I'd be more inclined to be looking for short setups going into next week. Okay, here is the VIX, and as you can see, the VIX stepped back into the Bollinger Band. I'd like to see the VIX either come here, we rally a little bit more, maybe catch some support, and then really start to catapult up. I'm looking for a deeper downside flush so I can end up starting to buy the market going into the fall and, of course, the winter months. Okay, now, I did cover gold and oil, but I did want to, I got a couple emails, why are you looking to short gold? I wanted to show you really the big picture in gold, and really, it comes down to this chart. Here's the monthly chart. Gold is now in the bear market. For gold to be out of the bear market, we need to see these 8 and 21 EMA start to cross back up and really start to get up to these upper levels. The only thing this has done is create a big bear flag and back tested the 8 EMA. This is why I am still looking to short gold. Now, obviously, you need to pick your points in gold. We're not looking just to short it, but I had mentioned 416 area, and so far, that number is holding up perfectly, and that is the 38% retracement in the gold weekly chart. Now, we also had a couple of dojis, and you notice how every time it gets up to this area, we have aggressive sellers coming in. So until this starts to break down, I will still be a better short seller in gold versus me looking to buy gold. Now, I'd love to buy gold if we can get a big flush down to this area here again. That's where I will be a better buyer. But that's why I am still looking to short gold. Here's this a daily chart. As you can see, we're coming into here. Now, if we lose that 1416, that 38% retracement, we're going to get a big push to the upside, no question about it, and probably end up tagging a 50 or the 200-day moving average. And by that time, it'll probably get up there. Now, that could be a bunch of factors. Could be a risk trade on, something goes on with Syria. As you know, Congress approved the short limited stay of bombing Syria, but we don't know. So that is why you have to be aware of your risk when you're dealing in gold and crude oil at this time. So that's why I like gold short, but I like to see it hover around here a little bit more and then break this little support area here below 1390 and look to get short. Now, we do have some support areas here, obviously the 20 and the 50-day moving average, so that's what we have to contend with. But if gold's going to go, it'll just break down. And right now, that's not the case. So that's why I'm just watching it patiently, looking for an entry and a setup. And speaking of gold and oil, let me just show you WTI. And as you can see here, guys, we're still hovering here, crude oil, back into this area here. We did sell off a little bit yesterday, but I like to see a deeper downside correction before we look to get long this area here. Here is the area I'd like to get 102 or par, right around here 100, or a break back out of it and consolidate above this area before I would look to get long. Right now, you're just in no man's land. I don't think this is an area or spot to be long crude oil. And just a quick look of the GLD, as you can see here. Now, this is still bullish because it is looking like another bull flag. And we do have an inverted head and shoulders here, target of 150. Now, again, I think that's a bit aggressive, but it is what it is. I think, if anything, you get to 141. I like the 139, 140-ish area, right up in this area here, right up in this cluster area, and then sell GLD. And that's what I'm waiting for, to see what happens there. Now, as far as USO, as you know, we filled the gap in USO. Not quite, but we're getting there. Actually, we didn't fill it. Missed it by about 10 cents, but still. I'd like to see a breakdown back into maybe this 50 area, this beneath this lower area of a cluster of price, right up in here, and that 36.95 would coincide nicely with this little volume profiles. And if we lose it, then we can actually get back down below this area here. So watching gold and oil, I don't see a great trade involved in that. Here's the EEM I showed you yesterday. We did break back out here, so this is a good sign. And again, remember I mentioned I'd like to see right up in here is where I would like to be a better short seller in the EEM if it could hold and reverse. So watching EEM as well. And here's the 60-minute S&P. As you can see here, we're just kind of hovering right now between a 38 and 61.8% retracement. And we do have a big supply zone up in this area here. So this is normal and common. Now, if we take out that 1628 low, I'd see you see the flush down to that 1596, and then of course the June 24th low again. So just keep that in mind. Right now, not much going on. Now, as far as the sectors are concerned, we do have bear flags forming. As you can see here, another bear flag here, guys. Flagpole flag itself. We had one here, we gapped lower, but we did fill the gap here. So we filled the gaps in many of the sectors. Now we need to see which way this thing goes. Now, I do think that if we do have another push up, there's going to be a lot of overhead resistance to contend with. So this here, another push back up to the 20 and into this longer term uptrend line from the November 12, 2012 low. That's going to be major resistance. And then plus you got the 20 and the 50 sitting up here. So if anything, I would like to see a rally back here before we flush down one more time, maybe to the 200-day moving average. Again, this is just hindsight right now. Let's see what happens with price. Price is king, and price is what pays the trader. So let's see what that does, and let's follow what price does before we come to any kind of conclusions. Here's the Spider daily chart. We're already back up in here now. Here's a good little bounce area when I mentioned. That's why I put the Fibonacci retracement, 50, 61.8%. Usually get some sort of a bounce. We did fill the gap here as well, as you can see in this area. We fill the gap, but now we have the 20 and the 50 contending with. And also, here's what I don't like. As you can see, the 20 is about to cross the 50-day moving average to the downside. Okay, and we have the 50 starting to curl lower. So we have some negative movement here in our moving averages, but we do have our momentum indicators, MACD starting to curl up, and our stochastic starting to curl up. Actually did cross the signal line. We have not crossed the 20 line yet, but if that happens, so we have a little bit of mixed bag here. We have some positive and negative developments, and the best thing to do is, if you are looking to take positions, is wait till they pan out and everything is in alignment before you look to get long and or short. Here's the IWN. Same thing, guys. Another bear flag here. But we did fill the gap here. We filled the gap on, I believe it was on Tuesday. We filled the gap, and then we sold back, and we failed. And we're holding this long-term uptrend line from the November 2012 lows. So the Russell definitely one of the strongest, and the NASDAQ really is the strongest, and I'll get into that in a moment. But Apple had a couple of good upgrades yesterday, held up nice. But again, guys, this is the critical area. Here's where I keep saying is the area here. 504, if we break and hold 504, we're going to get a good beeline run up to the 518 area. If we lose this area here, it's quite simple. The 585, we're going to get a flush back down to either this uptrend line, the short-term uptrend line, or the 200-day moving average. Okay, right now, all this is just a trading vehicle here. And I think that you probably see lower prices before we move higher one more time. So this is interesting. Okay, now, there's a meeting. Tim Cook has a meeting, as you know, with Carl Icahn next week. That could be a positive sign. Maybe we don't flush anymore. Maybe we start to move up higher again. But there's a lot of analysts that are calling for lower prices, and there's a lot of buy-side analysts that are also calling for higher prices. So you got a mixed bag here, and the best thing to do is to just wait it out and let price dictate which way he wants to go. Now, as you can see here, you know what this looks like as well. This looks like a big bull flag, and here you go. Right into support, and then we broke that bull flag pattern. See, here's the flagpole, and here's your flag. So we could actually break out high, but again, 504, 505 is going to be a big area of support, of resistance, that we need to really take out on a closing basis to see some further upside. So there's Apple's analysis, and of course, here's the transports. Did very well yesterday, and again, transports are weird because when you think transports are breaking down, next thing you know, they reverse and then they run up for 3, 4, 5 days. But nonetheless, this is what you want to see. But as you can see here, our moving averages are coming down, and we're ready to cross the 50-day moving average. So we do have some negative movement in the moving averages. So just something to keep an eye on and be prepared. But we need to really break out here. If we can't break out this 114.20 and we start reversing to the downside and take out this low here, 111.40, then I think the market will be in trouble, and I think you see some continued downside pressure. And here's the SMH. The head and shoulders pattern worked. We did get our target here. And then we're just now starting to break up high. Intel had a phenomenal day yesterday. So maybe this SMH trade is over now. But again, it's a great way of looking for trades. If you think market is weakening, look for an ETF, find a weak ETF, and then look for the components and find the weakest stock in that ETF. Or the strongest stock if you're looking to get long something. So that's a great way to look for trades, guys. I do that all the time. And as you can see here now, this is something that's a good sign if the market wants to rally further, because you really can't have tech losing its luster and the other markets are moving higher, right? But we do not have that here. We have NASDAQ, one of our leaders, actually working out really well, and I'll show the cues to you in a moment. Here is Goldman. Goldman filled the gap as well. But again, guys, we have a negative, we have a 20 and a 50 cross. We're above the 200, but we are down below our 20 and 50. So still have some downside movement here in the moving averages. And to me, this just looks like a quick back test. I think Goldman has to break back above 159, call it, and kind of hold this area here before we get a big test to the upside again. And here is just the XLF, as you can see here, another bear flag, testing back into the November 2012 lows. As you can see here, MACD stochastic still lower, still weaker as far as momentum. We did get the cross, but we still haven't crossed back above it, as you can see here. So we want to see the MACD and stochastics really start to break back above the upside to really get going. Now again, this just could be a quick retracement rally. And here's lastly is the Qs. Qs filled its gap and actually moving higher. NASDAQ is the strongest of the 5 that we follow in the last couple of weeks, showing some excellent strength. So again, if you don't want to be looking to short the market, look for NASDAQ stocks and look to buy stocks in the NASDAQ. If you're looking to get short, look for an ETF again, and or the S&P if you feel the S&P is indeed headed lower. Okay, really simple. Get the trend out of the way. That's 50% of the battle. All right, guys. Let's see what happens with ADP today. And again, tomorrow is non-farm payrolls. I'm really looking forward to get into some full active trading next week. And once we get the non-farm payrolls out of the way and everybody gets back into work, I think you're going to get some great volatility with some great opportunity in the markets. Have a great day. We'll speak to you tomorrow. Take care.